Federal tax policy is breaking us all. The recent tax cuts will benefit the economy, but Congress did not reform the tax code. It remains a 75,000-page disaster. The doubling of the standard deduction will help some people, but not many. Few, if any, economists think the highest corporate rate should be lower than the highest personal rate. The tax code itself continues to restrict liberty. Two specific problems are that it encourages lobbying and that it discourages economic diversification. The two solutions are to simplify the tax code and to incentivize dividends. Congress has not given serious attention to the federal tax policy since 1986. Cuts to rates are not the reforms many Republicans campaigned on. Americans spend nearly 2 billion hours and $55 billion to file their tax returns. For the 1/3 of us who will continue to itemize, the process remains tedious. There is, however, a bigger problem. Approximately half of all Washington lobbying involves the tax code. Federal tax policy encourages lobbying by special interest groups who want deductions that favor their activities. Since lobbyists donate to incumbent members of Congress almost exclusively, many voters are suspicious of the arrangement. Congress needs to simplify the federal tax code. Better than more deductions that further complicate our taxes would be lower tax rates across the board that benefits everyone. Imagine a person who makes $90,000, deducts $30,000, and is taxed at an effective rate of 28%. Her tax liability is $16,800. But what if she had zero deductions but was taxed at 19%? She then owes $17,100. Then, Speaker Ryan, everyone can file their taxes on a postcard with no software expenditures, no expensive accountants, and most importantly, with no Washington lobbyist mucking up our federal tax code. Don't worry, sir. I'm sure someone else will fund your re-election campaign. Here's my second idea. Congressional manipulation of the economy through the tax code affects all of us. Individuals and corporations respond to tax incentives. Our current tax policy encourages publicly traded companies to stockpile cash instead of paying dividends to investors. Let's imagine you are CEO of the Acme Corporation and I'm a stockholder. You must determine what to do with the $100 billion in Acme's account. Under current tax policy, the best thing you can do for both of us is to sit on that pile of money, thereby increasing the value of Acme's stock. If you instead paid a dividend, we would both be taxed, you at the corporate rate and me at the capital gains rate, and we would both be poorer. In the long run, this leads to a less diverse market and endless mega mergers. Congress needs to rewrite tax policy so publicly traded companies can expense dividend payments. On the corporate side, a business should be able to expense dividend payments to its stockholders just as it expenses payroll payments to its employees. On the individual side, individuals should then pay income taxes on dividend payments just as they do on payroll payments. The few economists who have considered this agree that the economy will benefit from the greater circulation of money into more hands. Then, instead of Acme buying out its competitor with all those billions of dollars, which stifles competition, individuals will buy a greater diversity of stocks, which increases competition. Or individuals will spend their dividends, which increases consumption and jobs. Or maybe they'll save the money, which increases stability. There are numerous benefits to my plan.